The IMF is warning that Europe's economy is falling behind even further to the US. We talked about it with Pascal a second ago. If you look at the growth forecast, the euro area is measly 1.2%. That's a full 1% behind the United States. The fund says that Europe needs to get more productive. It also says there needs to be more cross-border activity in the euro area. The EBRD recently lowered its growth forecast for the nations it covers. It should note includes much more than Europe, and the EBRD president is with me now. Odile, good to see you, ma'am. You've been warning along these similar lines for some time, and you heard Pascal a few moments ago talking about it. I do wonder whether Europe is capable of increasing its competitiveness and productivity to reach potential.
Yes, I'm convinced Europe can do it. It needs some reform. It needs a clear strategy. I think that the Draghi report provides a lot of input into that discussion, but I think that can be done. And it's important also to see that in Europe you have some nuances, some countries which are showing a high level of growth, high level of convergence. So I think that it shows also that this is possible if a government puts in place the appropriate reform, and if there is a right dynamics also at the EU level to go deeper into market integration and so forth. Because the big success of the EU, and when you see the situation of the new members, what was called the new member states, so Eastern Europe catching up in the EU, it was really very much due to the convergence with the single market.
The increase of the union and the potential for new members. There are plenty of candidate countries, some are moving further and faster than others. But the reality is it would be very dodgy for the EU to start bringing in too many new members. It's simply not able. There's enough problems structurally within the existing countries without adding more.
That was very much the logic a few years ago. I think there is really a new impetus, a new dynamic on the enlargement discussion. Enlargement discussions are complex because it's for countries candidates for accession. It's a huge endeavor to take into account all the EU regulation, be able to enter the EU single market. But on the other hand, it's a great opportunity to focus on reform and to increase growth because of the convergence dynamics. So EU is willing to do that with countries that are able to catch up. It's also very, I think the underlying reasons are also very geopolitical to ensure stability of the EU. So it will take time, but I think there is a strong political impetus to do it.
So I just want to finish with Ukraine, because I know you and I have talked on several occasions. Ukraine is an enormous part of the EBRD's work, and you are roundly and firmly committed to continuing it. But I do question the wisdom when, Ukraine's not going to lose per se the whole country, but that things are getting more difficult. Is it wise for the EBRD to continue this level of financial support?
Yes, I think it's wise because we have the backing of our shareholders. For a bank, it's always difficult to intervene in a war situation, but we got some support in the form of guarantees and now capital increase in order to be able to absorb the risk that represents investing in Ukraine. To be fair, up to now, our investment have been successful. So, of course, and because we finance companies that are able to borrow, that still have revenues, activities, and so forth. So I think that our support is warranted. It's very important for the country in order to be able to sustain the war and to defend itself. But it's also wise from a financial perspective. And we are very strict on our risk taking, but also, we have the support to do it, and this was confirmed by rating agencies.
I look forward to talking to you face to face next time we meet. I'm very grateful for you coming in today. Thank you so much. Have a safe journey home. Thank you.